The 2025 housing market is off to a rough start as interest rates hit the highest levels that we've seen in nearly 6 months. With that said, inventory's picking up. We've got some positive signs out there in the housing market. So, Josh, at the moment, the housing market looks a little bit broken in the sense that it's, trying to get back to a normal market, but at the same time, there's a lot of chaos, a lot of volatility at the same time.
Well, Jeb, over the last 2 years, one of the big things we've seen is how sensitive the market is to interest rates. We saw, 2-3 weeks ago, we got the December home sales came out. And when we looked at those, people were shocked that they were up. Like, well, there is a lag. It's not that, hey, rates drop, I get something under contract and I close 2 weeks later. So what we were seeing was the echo of that drop in interest rates in August, September, and early October before they started trending back up. And we saw the same thing last year. Even though in the first quarter of last year, rates were going up in 2024, we had big spike in sales. And we'd seen the same thing in 2023 because both times towards the end of the year, in November, December, we saw an improvement in rates. And when you see those closings in January and February, the market had improved. So we're going to see the opposite here because the rates had dropped a little bit earlier and spiked a little bit earlier. And I say spike because we don't know what comes next. We had a really nice movement back down in bonds today. So, Jeb, we can't say that's enough that there's a trend change in interest rates. But we've seen these waves. We talked about in the interest rate episode last week, just the volatility of interest rates, but then how that impacts housing. So big picture, affordability, over a 6-12 month time frame, we've seen waves of improving and worsening, but it has stayed at relatively low levels of affordability. So home sales are at low levels. And what we're seeing is inventory on a national level increasing. But we talk about all real estate is local. National doesn't tell us much. So why don't you walk us through, Jeb, some of these headlines that are screaming about inventory up, and then we're going to give some context to that and talk about what you, as a person considering buying a home, first home or next home in 2025, what you actually have to be looking at to determine your market and what it means for you as a buyer.
Yeah, while affordability is getting worse, payments shock, if you will, for a lot of buyers looking at buying a home. One of the pluses, one of the bonuses, if you will, is that inventory is picking up, right? So the last 4 or 5 years, every episode, every video that I've done is talking about low levels of inventory and how that's essentially driving higher prices, driving competition, driving a lot of these things. And in some markets, it still is, but it's starting to normalize, Josh. And, we often talk about people having short memories. They don't remember what a more normal market looks like, where homes do sit on the market for a couple of weeks, couple of months in some cases. You do see some price reductions. You see inventory starting to build. And this year's a positive sign for inventory because last year inventory didn't even start to pick up on a national level until April, May. Now this year we still haven't seen that trend up quite yet, but we've noticed it here in Orange County and Huntington Beach. We're seeing inventory pick up week over week. Whereas last year, it was the opposite of that. So one of the positive signs for sure, but there's this term out there that's being coined a lot, something that I don't even know that I heard it prior to the last 6 months, and it's that bifurcation of markets, if you will. Basically meaning some markets are doing well while other markets are doing not so well. And you can take that in whatever context you want, but inventory is really the thing that people are talking about because Miami, South Florida, 9.8 months of supply on the market, Josh. Whereas you look at some of these areas in the Northeast, less than a month of supply. So it's this tale of a lot of things going on, and you have to pay attention to that.
We have some numbers here to give context to that. So hold your thought. I want you to finish what you were saying, but let me throw some numbers in there. The number that we're seeing, so if you pick up the Wall Street Journal, you pick up a national newspaper or any of the publications that are going to be in your Google feed that are on a national level. National inventory is up 22% year over year from December 2023 to 2024. You look at that and you go, oh my God, that's terrible. That's horrible. The market is crashing, but that's still 15.7% below the pre-pandemic levels from 2019.
But it's also important to note 6 months ago, Josh, we were 30-something% above last year's number. So because of the time of the year that it's tightened a little bit, right? This is the time of the year where things, less homes are on the market, more homes have been pulled off. As inventory starts to rise, which it's going to in the spring, homes are going to sit longer. You're going to see numbers 35% above last year. And it shouldn't be a shock because we're having this conversation now, because it's all about timing in the year. Not only is real estate local, it's seasonal. There's things that impact the market that as a buyer, you have to pay attention to and be aware of, so that when you're making those decisions to buy, it's, you're not getting caught up in those headlines.
So let's close that thought. Still 15.7% below pre-pandemic levels, which is generally defined as where we were in 2019.
Yep.
So 9 states have already back at or above 2019 levels. Arizona, Colorado, Florida, Idaho, Oklahoma, Tennessee, Texas, Utah, and Washington. So Gulf states and Western states that really had big booms. We've got several that are really close to those levels: Oregon, Alabama, Nebraska, Hawaii, and Georgia. But you were talking about the Sun Belt, talking about Florida specifically. So Gulf Coast, Sun Belt states are where we're seeing the biggest impact or the biggest increases in inventory. Talk about that.
Well, why? Why are we seeing the biggest impact there? Well, a lot of it, which we're going to talk about, is migration, right? So what drives up home prices in areas? What takes inventory off the market? It's buyers. It's buyers coming in for one reason or another. Over the last couple of years, you've had several things, right, driving home prices up in the Sun Belt, if you will, and it's a lower cost of living, right? People moving from high cost areas down to different areas in Florida, and in turn, that's taken prices upward. But you also have migration, people coming from New York and some of these colder states down to warmer areas for one reason or another. You have corporations, these BlackRocks buying investment properties because they're more affordable in these markets. Now, I'm not saying they're your competition, because I don't believe that they are, but they add to the problem of taking some of this inventory off. Higher insurance costs, higher HOA fees, all of these things impact inventory. And the last two that I mentioned there, Josh, have been a bigger problem over the last probably 12 to 18 months. Higher property taxes, higher insurance costs. These things are higher HOA fees are affecting affordability as rates go up too. And so it's causing buyers to say, for one, maybe I can't even afford that property in Florida anymore. And secondly, I want to just wait and see how some of this stuff plays out, because, hurricanes, all of these different things are impacting inventory in a negative, in a positive way if you're a buyer, because more is coming to the market, but in a more negative way if you're somebody that's looking to sell, or, potentially, I don't even know where I was going with that, Josh. I lost my thought entirely.
Let me give a couple stats here that I think sort of underline some of the things that you were saying. New construction surge throughout the Sun Belt, throughout the Southeast, because a lot of land, buildable land, affordable, little less regulation there, easier to build more affordably. And as you said, migration, people moving from colder climates to more affordable, warmer climates. So let's take a look at that. From 2023 to 24, the top 4 gainers in population: Texas added 85,000, North Carolina 82,000, South Carolina 68,000, Florida 64,000. So all Gulf, Southwest. I mean, Texas is huge and comes almost out to the west, but let's put it in context. That's a pretty big slowdown from where we were in the peak. For Florida, added 64,000 last year. It's in the top 4. In 2022, they added 314,000. So we're down, 80%, or 20% of the in-migration that we had 2 years previous. Texas, 85,000, down from 222,000. So down 140,000. So when we have tons of people moving into an area, limited supply, affordability is much better with high interest rates. It makes sense. Those markets were on fire at that point in time. And now we are seeing the opposite, as the migration is still, they're the states that are benefiting the most, but not this outsized wave of people moving in. So these are the things that we talk about when we say you need to know your market. All of these national things do not matter. Like if you are in a tight market in the Northeast, what are we looking at? We have 76% less inventory relative to 2019 in Hartford, Connecticut. If you're in Hartford, Connecticut versus Austin, where it's up 36%, national numbers don't mean anything to you. One's incredibly tight still, and one has loosened considerably from where we were. So how does a buyer find an expert or the data, so they don't necessarily need an expert on their local market who can get this, because we're still talking very big, broad national reports. You and I look at one from Resi Club, 800 markets across the country, but it's not going granular. It's not going down to zip codes. It's not going down to neighborhoods. And that's what you on the real estate side and other people like yourself specialize in. And the greatest value in having someone like that on your side.
And I think you said something important there, Josh, is it is granular to some degree, right? So in Austin, I'm sure there are pockets of Austin that are still doing fairly well. I mean, I had a friend today post something on Facebook. He's looking for a seller or a property somewhere between $3.5 and $5 million. It's what he needs is not on the market. Okay, inventory's up 36%, but he still can't find what he needs. So you need somebody that understands not only the city that you're in, the area that you're in, you also understand the price point and exactly what you're trying to accomplish. And honestly, the easiest way is to find somebody that serves that market that you know, you like, you trust. We talk about it all the time, Josh, getting a referral to some degree. Now, if you know somebody that's purchased in that market, they had a great experience, reach out to them. Ask them what they liked. Ask them if they can make the connection. A lot of you don't have that, don't trust that, don't want to interfere, like, buying a home with relationships. You don't want to get caught up in this kind of not work, deal, but just don't want to cross relationships in some regard. And I have friends like that out here in California. They're like, Jeb, dude, I love you, but when it comes to buying a house, I don't want it to affect our relationship. And it wouldn't, but they choose to do other things, and that's okay. And so maybe you're in one of those, you need a referral, reach out. There's a referral link in the description. We can connect you with people in these markets that can guide you through the process. On top of that, you should be trying to read as much as you can about the facts of your market. What's happening with inventory, what's happening with buyer demand. These are really, really important. How long have homes been sitting on, days on the market? What does that look like compared to 2019, 2018, 2017? Don't just watch YouTube videos and get caught up in the doom and gloom, or read the Wall Street Journal or whatever your local newspaper is and read the headline and not read anything else. I think that's where people stop. They say, the market's terrible, I read this, and they don't go any further. You need to go further. You need to dig a little bit deeper. I have a local, we have a handful of newsletters that we subscribe to, but here locally, Orange County, there's a great real estate report that I send out to my clients every 2 weeks that just says what's happening here on the market. That's what you need, and so that you can make logical decisions, Josh. I mean, and the same thing for the mortgage side, but that's less impacted by the national side.
Well, I mean, the thing that you said that absolutely carries over to the mortgage side. I have friends and family that use me for their loans. I also have ones that, not that they don't like me, that's pretty personal. You're opening the kimono, so to speak, on all of your finances, and some people just aren't comfortable with that. So by all means, if you have someone that you feel is good for you on the mortgage or the real estate side, fantastic. You can use us for data, broad overview and updates and education. But if you need someone, either we can help you with the loan side, or we can get you connected with someone that can. Big picture, Jeb, kind of talking today about overblown national headlines about inventory being up. We're seeing a more normal market, which does give you more power as a buyer. But on entry level, which most of our listeners are looking at first time buying at median or even slightly below that. And that's where we're still seeing, even in the markets that have loosened up with more inventory, that's still the tightest part of that market. Move-up buyers, luxury buyers are having an easier time of it. That's where the greatest concentration of this additional inventory is coming into the market. Still don't have a lot of first-time buyer inventory. So from that perspective, what is our advice or our suggestion for anyone looking to buy here in the first quarter or at any point here in 2025?
Josh, I want to back up before we get into that. It's important. And that you said, well, you didn't say this directly, but I'm going to say it. And that's, pay attention to where the inventory is growing, right? So here in Orange County, our inventory has been growing over the last couple of weeks. But if you look at the price points in which that inventory is being added, that's not where we need the most help. Yeah, it's going to help people. Don't get me wrong. But if we can get more under $1 million, then that means more first-time home buyers are probably buying homes. It also unlocks some additional inventory for people to move up and some other things. So pay attention to that stuff. National news doesn't give you the price point, in the headline that, hey, most of these homes are being added in the middle to luxury price points. Okay, if you're looking at $250,000 in Oklahoma, that doesn't help you, right? And so that's another layer to just pay attention to when you're looking at that stuff. But what can you focus on right now, Josh? Again, going back to the basics, focus on where you are. It's a really good time to start planning, right? If you don't think the market right now is for you, higher rates, not really seeing the inventory that you want to see, kind of waiting for the spring for things to pick up a little bit, now's a really good time to plan. Write out that budget, start focusing on credit score, talk to a lender now, get the pre-approval now, and work on the things that you can control. You might get that pre-approval and find out, crap, I can't purchase nearly as much as I thought I could because maybe I don't have the down payment that I thought I could, or maybe I would be in a better position if I paid off some of this debt, or if I worked on getting my credit score a little bit higher and got a little bit better rate, because now I can afford to purchase more home. All of these things matter. And I think most people look at the home buying process as, hey, it's a static thing. It's where I am right now, so that's it. No, you can progress through this process and end up on a much better path if you work on the things that are controllable in the big picture. Before we move any further, if you find any value in what we're doing here, in us educating you through this process, do us a favor, hit that thumbs up, share it with a friend. And if you want to stay updated on everything that's happening, housing related, mortgage related, real estate related, do us a favor and subscribe to the channel.
For anyone who's been listening for a while, they know that me, even more so than you, I do believe whether it's 1, 2, 3, 5 years, 3 months, we're going to see better rates. We've seen windows of better rates. We have the rate watch for those of you who are homeowners and looking to refinance. But when we say it's never too early to talk to a lender, you may say, hey, at 7%, I'm priced out. I literally cannot qualify to buy what I need in my market. I need to get to 550, and at 7% rates, I can't do it. Well, we had 6.25 rates 120 days ago. But if you wait till they get to 6.25, and we have a brief window, like we had 3 to 4 weeks at that level, you're going to miss that window. So talk to a lender and talk about our target rate of either where you are now eligible and qualify for that home, or target rate where that's where my comfort level is. I'm not comfortable with a home priced at less than 550, and I'm not comfortable with a payment above this. Okay, here's our target rate. Here's where we have to have you. So I can monitor that. Your lender can monitor that and follow up and say, hey, Jeb, we hit that target rate. Let's just jump on a quick 10-minute call. Let's revisit the numbers. And it may be enough where you go, I'm in. Or you may go, we've revised it and we think this is where we need to be. It's an ongoing conversation. Like for me, as long as I'm having conversations with people who at the right point are wanting and ready to buy, that's what my job is. It's not so much just connecting the dots on loans every day. That's the easy part. That's what my staff is for. But having those valuable conversations with you is what a lender, what a loan officer should be doing. So from my perspective, get to know your market. If you're wanting to look from the outside in and not talk to and engage a realtor yet, Resi Club has those analytics for 800 markets. I think it's like $150 a year. I don't know if they do it on a monthly basis where you can get it cheaper, but in the grand scheme of things, that's not a lot of money to spend to get a much better granular local view there. Altos Research, same thing. It's not the cheapest, but you can get that down to the zip code level for your areas if you're not willing and ready to engage with a realtor. But what I would say is if you're wanting to buy in 3, 6, 9, 12 months, you really need to start getting to know your market, getting to know your qualifications, what payments look like at various interest rates. So when things change, because we are in a volatile market, that you're not sitting around ready to start your analysis. You've done your analysis and you're ready to move when the time is right.
Right. And we have some notes here, Josh, that I think are worth mentioning. I mean, if you're out there buying in this market, considering buying, whether it's now or 3 months, 6 months from now, the builders are looking like really good deals at the moment, especially if they have inventory. Builders aren't in the business of holding on to property. They do incentives to help you buy down the rate. They do incentives for upgrades, different things that can help offset the payment in some ways that you're not able to get on existing home sales. And so that's a piece of the puzzle to pay attention to. Also, getting in, finding out insurance costs earlier in the process, not waiting until you're in the middle of buying a home is super important right now. Paying attention at all. Fires in California, hurricanes, floods, just things happening all over the place. And insurance premiums are going to rise. So This is not a surprise. Don't be shocked when you see it. But it's important if you're in the process of buying a home that you're doing this sooner than later so that you're understanding how that's going to impact your bottom line, how it's going to impact affordability. Because Josh can give you an idea of what they use, but he can't tell you what your insurance cost is going to be because it's based on so many different factors. So paying attention to that. Inventory is likely going to continue to increase as we move into the spring. It's a seasonal thing. It's something it's not out of the norm. So inventory is going to grow. And I think the most important thing we have written down here, Josh, is local conditions trump national trends, right? We've said it several times in this episode in many different ways, but at the end of the day, it really comes down to locality, to what's happening in your neck of the woods, if you will, versus what's happening across the board.
Absolutely. Sort of to underline your point on two of those points, we lost a listener to the show yesterday to a builder. In San Antonio, a market that is a market. They're not dead. Josh lost them as a borrower. He's had a tough time. Been looking at homes for a better part of 2-3 months. They need to stick right around 400,000. Family of 5, so they need a bigger home. And they were able to get 2 under contract, and they did inspections, and they just weren't happy, and the sellers weren't willing to negotiate with what needed to be done to those properties. So they walked into a new build that fit their needs, and they were getting over 1.5% subsidy on the interest rate. I can't even be mad about that. I'm like, what did I tell the guy? What I told him is, hey, hopefully they can get you approved. If anything goes sideways, let me know. We can still close a loan on a new build, but they're going to eat $20,000, $25,000 of losses on that loan to get you in that home, to get that one off their books and make their profit. So 2 pieces there, just underlining that different price points, even in softer markets, are still going to be tighter than higher price points, and that the builders can be a workaround for you with that to increase affordability.
So if you're looking to buy, invest, anything in 2025, maybe even later, just want to talk, reach out using the link in the description, get in touch with our team. Josh, happy to walk you through the numbers, see what they look like, compare it to maybe somebody else that you're talking to, just to give you a general idea of what it looks like out there. But use us as a resource. That's why we're here. We want to help. But until next time, make sure you're buying right, borrowing smart, and building wealth. Adios.
Amigos.